Hello, my name's Tim Gregory. I'm from Vermeer Investment Management in the UK. Hope everyone is well. Today, I'm going to try to address the question that we're being asked more and more frequently about the stock market, and that is the question of, are we in a bubble? Are we seeing a repeat of 1999-2000 where technology stocks and the NASDAQ performed absolutely brilliantly before March 2000 saw a significant reversal and a very big fall in the fortunes of the NASDAQ? And sadly, the simple answer to this question is there is no simple answer, because we are in unprecedented times in terms of central bank policy, creating liquidity for the market and interest rate policy very close to zero. That has helped the performance of equities enormously and is likely to remain in place for the foreseeable future. Now, where we do see significant comparisons to 1999 is the performance of a lot of stocks that have got exciting business models, but are at market cap valuations that simply cannot be justified by any of the short-term prospects that these companies have. But they may be, in the longer term, very successful and may indeed prove that the valuations that they have are worthwhile. But generally speaking, this will be less the case, and more companies will fail to justify those sorts of valuations. Now, the famous five, Alphabet, Amazon, Apple, Facebook, and Microsoft, are very much the center of attention for a lot of these discussions. But actually, we don't think this is necessarily the correct thought process, because actually, if you look at the cash flows, and certainly the results that these companies recently produced, but particularly the cash flows, you can see that actually there isn't a great deal of difference between the actual cash flow that they're generating as a percentage of the S&P 500's overall cash and the market caps that they're currently at. So in many ways, this suggests that they are priced correctly, and they do have very good business models that look set to continue to perform well in the current environment. So we don't actually think it's the famous five that are particularly the issue. We think it's many other businesses that have got to very lofty valuations that are going to struggle ultimately to justify the prices that they're currently at, even if they go a lot higher in the short term, which is entirely possible. And that is the problem with asset bubbles. When they are in the process of being inflated, you simply cannot tell when that process is going to end. And policy is set to help continue to drive asset prices higher and keep protecting the market when there's any risk of a significant downside. So what might change that? What might deflate this bubble? Well, one of the things that we worry about is if there is no vaccine to help with the COVID problem, and it is the case that central banks and central governments have to continue to support the economy and have to continue to issue bonds for trillions of dollars to keep the economy ticking over and going forward, then we could see ultimately an inflation problem. And this, we believe, is what could lead to a major reversal of the performance of many of these stocks that have done so well. Now, we're not sure when this might occur. Indeed, it may not occur. So stocks may continue to be in this vein for many, many months to come. But this is something to be mindful of. Stocks are in very elevated territory relative to history. This can continue for a while yet, but we would urge investors to be vigilant, think carefully about the prices you pay for the stocks that you own, continue to focus on cash flows and quality, and watch out for any change in central bank policy or the risk of inflation that may change the narrative that is currently driving the market. Thanks very much for your time.